Scalping 101 with gold. In this video, we're gonna talk about scalping primarily with gold and what scalping is and some of the key features that you need to know about it. I'm also gonna go over one main strategy in this video on gold that you need to understand when it comes to scalping gold throughout the day. So what is scalping when it comes to trading the markets? Scalping is a fast-paced Forex trading style where the goal is to make small profits from quicker price movements. These price movements can be anywhere from seconds to minutes. When I say minutes, I literally mean 1 minute to 5 minutes or 15 minutes to 30 minutes, not even a couple of hours. The maximum in a scalp would maybe be an hour or two. It's really all about capturing tiny price movements or tiny price fluctuations throughout the day, getting in and out of that move. I like to call it pip and dip the market. Get in and get out, especially with gold. Since gold is really volatile, there's a lot of different movement on it throughout the day in each session, like your New York session, like your London session, and even your Tokyo session, like I explained in another video on the best time to trade. Go watch that video if you haven't seen it already. It explains the best times to trade gold. Now, when it comes down to scalping, what are some of the key features of scalping? Well, number one is it's quick trades. Scalpers will open and close multiple trades in a short period of time, not holding them for a long time, not holding or marrying one specific bias or one specific trade. Scalpers can take multiple trades throughout the day or throughout a session or a chunk of the day, a period of time of the day. What do I like to do when I scalp? I'm gonna explain more in this video. I just wanna go over the key features of scalping first. But when I scalp, I like to pretty much lock in from London session to New York session for a couple days out of the week. I don't always scalp. I'm gonna go over more of what I do when I scalp and when I scalp the market in this video a bit later. But let's go over some more key features of scalping. So key feature number one was quick trades. Instead of looking for bigger moves or marrying one bias, we're getting in and out of different moves. We could be catching a couple of sells in one session and buys later on in another session. Key feature number two, guys, would be high trade volume. Instead of looking for big moves in the market, scalpers focus primarily on placing many trades during a session to accumulate small profits quicker. Small gains are another key feature when it comes to scalping. Smaller gains adding up in a quicker period of time. So each trade targets a small profit, usually just with a few pips, or I would say a minimum move. So usually each trade just targets a small profits or a good move in a quick period of time, 5 minutes, 30 minutes, or a nice reaction on a candlestick. But those small wins add up over many trades. So what a lot of traders do when it comes to scalping is they focus on a higher trade volume, a higher hit rate, and they also focus on liquidity. Scalping works best in high liquidity markets where prices move smoothly and traders can enter and exit easily. Scalping requires really being a fast decision maker, whether you're in profit or in a loss. As quick as you see those profits and you close them, you kind of want to treat losses the same in a way. You don't want to be marrying your trades too long when it comes to scalping. If you have a high win rate with scalping, as much as you're winning your trades and you're closing them out of profit, when you have that loss, it's best to just accept it and take it much quicker. So a successful scalper is someone who can recognize quickly when they're wrong and get out of that trade quickly when they're wrong, as much as when they're right. Because a lot of scalpers have high win rates. They win more of their trades because they're getting in and out of these quick price movements. But the problem a lot of traders make when it comes to scalping is holding that one trade for too long, letting that one trade lose more than it should have. Scalping, you can have a high win rate, especially with a strategy like the one that I'm going to teach you guys in this video with gold. As we go forward in the video, we're going to talk more about the charts and how price action impacts gold in the market when it comes to scalping. But remember, scalping requires quick thinking, discipline, and fast execution on both sides. Traders have to be really sharp and ready to react to price movements instantly. It's not something you can really sit there and wait and guess, because you'll miss the move and the trade will be gone and you have to wait for another setup. So you have to get used to seeing these quicker moves, and they typically come on smaller time frames: 1 minute, 5 minute, 15 minute, 30-minute charts. These are typically the main time frames that we're looking at when it comes down to scalping. So with gold, we already know from our one video that we already talked about when gold moves the best, that gold can pretty much move anytime in the day when it comes to New York session, Tokyo session, or going into the London session. A key thing you're gonna wanna recognize if you get into scalping with gold, or if you practice that style, is that every $5 on gold pretty much acts like a support and resistance. You're gonna have to be aware of every $5 on gold, because throughout the day, when you look at a 24-hour period on gold, it's gonna be touching different $5 price levels. And what you're gonna recognize, if we go through a 24-hour period in the day, for instance, from this blue line to this blue line is one full day of price action. Right now, I'm on the 5-minute time frame on gold. We can notice a lot of support and resistance coming in at or around these $5 levels. Remember what I just said, guys, at or around, because later in this video, I'm gonna show you guys some examples on how I was able to flip this account with $4,500 profit, scalping gold only. It looks like there's some small trades there, and there's a reason. It's because I'm scalping the market. I'm in the market a lot, so I'm not putting on a lot of risk. I understand that I'm gonna be taking a frequent amount of trades, so I wanna be able to accept some losses along the way if they come. And I'm also gonna show you, along with this video, this account as well, that I started with $1,800 and I was able to flip it into $3,361 profit. So there's two accounts here that I was scalping, and we have over $7,000 profit, almost $8,000 profit here for the week scalping gold. I'm gonna teach you guys and show you guys also some examples of some of the trades that I took, and you'll get an idea of what I'm talking about by the end of this video. So make sure you watch this by the end of this video. You're gonna understand how I was able to achieve this result scalping with gold. When I'm scalping, I typically like to have a smaller balance because I know I'm gonna be trading a lot, and sometimes I scalp into day trades. Like I'll try to scalp into a bigger move because I'm taking a lot of trades. One of those trades I can try to hold and see if I can get a longer winner. Typically that'll come in New York. But let's go back to the one key thing you're gonna need to pay attention to every day when it comes to understanding price on gold. It's marking out your $5 levels. So if you notice here, I'm on TradingView and I have them already preset and marked ahead of time. Every $5 is equally marked on the round number. So in a day, gold's gonna visit these numbers a lot, and you may find some supply and demand, or you may see the market maintaining these numbers in a certain way with supply and demand or support and resistance. So buyers and sellers, let's just say in simple terms. If you look for last day, if you look at yesterday's price action, that's pretty much what we're looking at here on the 5-minute. You can see here, there's a nice buy around 2660. The market's forming some small rejection candlesticks there on the 5-minute. If you're scalping there, perfect moment, and of course, even for a longer term trade. Any of these levels can act like support and resistance for short term and long term. But for scalping, when you're on a 5-minute, you're gonna see a lot of these moves go up, down. You're gonna see a lot of these different fluctuations on the 5-minute. A bigger move can come from one of these numbers. But when I'm on a 5-minute chart, I notice a lot more of these reactions on gold at the $5 price levels. So for example, if we look at this area on the chart, I've kind of put some arrows here to give you guys an example of where the $5 levels are. We can see 2660, 2665, and 2670. What do you guys see here in price? Well, I just want to keep it simple for this video and talk about the essence of like buying and selling, support and resistance. You'll notice a lot of buying or even selling can quickly happen at these prices. It can quickly happen even around them. If you look at 2665, the market breaks above it and it hits 2670 like a resistance. So you can see a quick price reaction there. So through the day, if I'm viewing the market like on a 5-minute, a 15-minute interval, there's gonna be different reactions at or around these prices. Here's a good one. It doesn't really look that good when you're looking at a 5-minute chart. But when you go to say a 30-minute time frame, when you go to say a 30-minute time frame here, you can actually see the candles are rejecting that $5 level. So like I said, if you go between the 5-minute and 30-minute, you'll see different types of confirmations or closes within the candles. For example, 2665 on the 30-minute breaks above, and then these candles form wicks on it, rejecting. And then we come back to it. So we can see the 30-minute can play a key role here. But if I'm just simply on a 5-minute, I'm pretty much gonna see like a lot of these different reactions on price. Like look at yesterday's price action here. We can see 26.85. Nice reaction on the 5 minute. You even have rejection candles there. The market trades all the way down to 26.75. So see, these are $5 separated apart from each other. You're gonna wanna study these levels, and then you're gonna wanna study other price action when it comes to just the general market. Market structure, break of structure, market structure shift, candlesticks, Forex market hours like market timing and your market sessions, London session, New York session, and let's say liquidity. But one thing you can start out as a new trader is studying these levels and tie all the other things that you know in together. So if you look at every $5, guys, you can see a lot of reactions happen at these $5 levels on gold. If you're looking at a 5 minute, you're gonna see a lot of them. We can even see rejection candlesticks, which I've taught on this channel on some other previous videos. We can see some rejection candlesticks happening at these candlesticks. At these $5 levels, we can see some clear rejection candlesticks. So think about it here. And I'm gonna show you guys some examples here in a minute. I'm gonna screen record the phone and then show you guys some examples here. We're gonna get to that. So what I want you guys to do real quick is look at this chart for example, and look at every $5 on gold. And what do you notice with price when it comes to these $5 levels? What I notice is we're making clear rejection candlesticks on the 5 minute chart. So these are 5 minute candles, indicating I could be taking a sell potentially here, or a buy potentially on this green candlestick after we get rejection, or a sell after this candlestick, or a buy on this candlestick after we get some rejection at 26.70. If you look at price, there's a lot of different fluctuations happening at the $5 levels. It's actually even moving in a downtrend structure, making lower lows every single time. So what I pay attention to when I'm scalping gold, because I've been on the chart so much and every day, trust me, one thing I'm gonna give you guys here in this video is if you just know this and you watch price every day, you don't even have to trade. You don't even have to try to trade this, but be aware of it and watch the charts. And I'm telling you, you're gonna see a lot of these reactions every day when you keep up with price. So when it comes down to scalping 101 with gold, there are a lot of other things we can take into consideration. The main point for this video, guys, was to help you guys understand one of the first steps and things that I start with is understanding the $5 levels on gold and how each one of them can act like a support or like a resistance. So this is a good thing I would study when it comes down to it, because a lot of you guys ask me on my Instagram, here on the channel, how do I catch these entries with gold? Because a lot of times I'll post them on my story, for example. So this is one of the ways I catch a lot of those entries that you guys always ask me about, or how I'm scalping gold throughout some of the weeks and days of the week. So I hope this video was some help for you guys understanding how to mark up your charts on gold when it comes to scalping. Remember, every $5 is the key way to start. And also remember, guys, scalping takes discipline. It's not for everyone. It's for those who have to make fast and quick decisions when it comes to your winners and even your losers. So I hope you guys enjoyed this video and you guys got value. Leave a thumbs up if you did. Comment if you guys have any questions, and I'll see you guys on the next video.